Galaxy sold over 80,000 Bitcoin that came from a Satoshi era investor. Scott Melker, he questioned whether this is part of a trend of these early OG whales losing faith. And that kicked off a big debate.
Galaxy sells more than 80,000 BTC for a Satoshi era investor. Welcome back to Mick and Mike. I'm Mick. That's Mike. We got a lot of news to cover today, and we're going to start with this particular story because it sets up a really important debate in terms of how do we view Bitcoin and all these institutions jumping in. But before we do that, Mike, break down the story for us.
Yeah, so Galaxy sold over 80,000 Bitcoin that came from a Satoshi era investor, one of the big OGs. Said this was simply Galaxy said this was simply part of the seller's estate planning strategy. His estate seems to be in a pretty good position upon this sell. But Scott Melker, he questioned whether this is part of a trend of these early OG whales losing faith. And that kicked off a big debate, right? So we're talking about, are they losing faith in terms of all of this institutional activity that is happening around Bitcoin and frankly a lot of other cryptocurrencies? You know, Bitcoin was created in response to the bank bailouts in 2008. You know, historically had this cypherpunk ethos, you know, kind of going against the system. You know, now Wall Street has kind of co-opted the assets. ETFs are running hot. You know, we have all these Bitcoin Treasury companies popping up, you know, it seems to be every minute. I mean, I think it's a very interesting debate that we've talked about extensively on this pod, and I think it's a debate that's worth having.
So I'm looking at this post and it says the most ardent early whales have seen their faith shaken. I don't know if I necessarily agree with that. I've had Bitcoin whales on my show, and I'm talking about maxis that are not just looking at it from the perspective of it's a financial instrument, but way beyond that. For them, this is like a philosophical movement, and nobody cares because at the end of the day, the way that they have faith in the way that Bitcoin was created. So if you are losing faith, then therefore you don't fully either understand how Bitcoin moves and how it's designed, or if you lost faith, then are you truly that Bitcoin maxi? You know, no disrespect to Scott here, obviously very reputable, but I'm going to push back on that. I don't think that these are early whales that are feeling this way.
Let's look at this from a couple of points of view, right? Like, so first off, Scott just says this is kind of what he's hearing. This isn't necessarily his opinion, but this is what he's hearing, right? So, and that's fine. But just kind of think of it from a couple of things. But one, you've got the true believers that will hold forever or for an extremely long time. But then look, like everything that's happening with Wall Street, with strategy, you know, all of these many Bitcoin treasury companies, it's hard to envision something, you know, 16 years in the future, right? But like, I don't think anyone can say that this is what Satoshi would have envisioned, right? I think from the beginning, yes, he envisioned more of a decentralized peer-to-peer, more medium of exchange use of Bitcoin. Obviously, that turned into more of a kind of digital gold narrative. But I don't think that he or she really envisioned public companies raising billions and billions of dollars to stockpile Bitcoin on their balance sheets. And maybe he doesn't even envision what's happening kind of in the Bitcoin ecosystem where, you know, the Bitcoin L1 is being used as a settlement layer by meta protocols or L2s or DeFi protocols, right? Maybe he wouldn't say that, but like that at least has some sense of decentralization and kind of a builder mentality as opposed to a financial engineering mentality. So I don't think it's all that far-fetched. I'm not saying that I believe it, but I don't think it's all that far-fetched for people who have been, you know, who have held on to Bitcoin for 10, 15 years to say, screw this, I don't like what I'm seeing here. I mean, obviously it's easy with someone with 9 billion to do some estate planning and take some money off the table, right? But like, I can't. I don't think I can blame someone. And yeah, you can say, all right, you're not a true believer. That's fine. The use of this asset definitely has changed from day one to to year 16. So I can't really blame them. I'm not saying I totally agree with it that this is what's happening, but I can't blame someone who says they don't really approve of how Bitcoin is being used now.
How has the fundamentals changed? Like what exactly are they afraid of? What is it about large companies accumulating Bitcoin? What is it about that becomes so scary for them?
I mean, I think it's the institutions that Bitcoin was built to, I don't want to say replace, but Bitcoin was built in kind of in spite of these institutions, right? Like with these banks that got all these bailouts in a 2008 financial crisis, the centralization around those bailouts, by central bankers and the government to bail out these investment banks and commercial banks. So Bitcoin was built in opposition of that. Now it's almost as if the success of Bitcoin is predicated on those institutions buying Bitcoin, right? So you've got this like weird cycle that happened where it's really becoming the opposite of what the original vision of Bitcoin was. But here's the thing: it's a permissionless asset, and that's one of the core tenets of it. It can't be truly controlled by any centralized party. Well, really, the original vision is, part of it is just like, okay, anyone can buy it, anyone can own it. But I see where these people are coming from, who are kind of hypothesizing that this kind of loss of belief might be the case of what's happening here.
If people can practice just being in possession of things that are uncontrollable, why can't companies? Why can't countries? So it's available to anybody, right? It's like you said, it's permissionless. So have at it. At the end of the day, if you have majority stake, it still does not change anything in terms of the design of Bitcoin. It doesn't change anything how you're holding it, unless you prefer to, say, sell your Bitcoin and buy ETF, and you just prefer to hold it that way. There are some people that are doing that. You hear more and more about people that they have so much that they don't want to self-custody. They prefer to have a institution hold on to their assets for them because they don't trust themselves or maybe their family. That's an option if somebody wants to take that option. They don't have to. But in terms of what it does to their finances, or in terms of how the Bitcoin has evolved, I mean, fundamentally, it's exactly the same. I don't know, maybe I'm talking to too many Bitcoin maxis that, just have convinced me that this is the case when it comes to Bitcoin, but I don't see any difference here.
Yeah, the asset has not changed. It is still the most pristine money in the world. It is the best performing asset ever, I believe. That has not changed. I think it's just a matter of the narrative has changed a lot. And hey, let me put it this way. You just mentioned the ability of, or the choices that someone can make on how to custody their Bitcoin, whether it's self custody, whether it's put it in a custodian, or just kind of switching over to an ETF. That kind of falls outside the whole kind of maxi belief too, right? Like the whole maxi belief is self sovereign money, self custody all the way, cold wallets, right? Potentially not even using it for to be a productive asset like what's happening in Bitcoin with Bitcoin DeFi. So there is this whole spectrum of how self sovereign you want to be. I hesitate to bucket a specific behavior with a specific label, like full blown Bitcoin maxi who has to self custody everything. I don't want to force anyone into doing anything. That, it is their money. But again, so I can't blame someone for selling if they don't believe in how the asset that they've held for for a decade and how that asset is being treated or acquired or used, and they want to get out if that's the reason, then that's fine.
I think it's overblown, way out of proportion. And I think it just speaks to where we are in the current cycle. So I think in general, people are starting to take profits in the short term because most likely we're near the top of this cycle than the bottom when it comes to Bitcoin. And we're starting to see some of these assets rotate into Ethereum. And along those lines, Mike, I mean, it's a big reason why you're starting to see headlines like this, right? Injective is tokenizing shares of prominent ETH Treasury company SharpLink. 3 months ago, 4 months ago, we probably wouldn't be hearing about this. We would be talking about how bad ETH is doing, how everybody's giving up on this asset, but we're not. Everyone's starting to accumulate ETH. ETFs inflows for ETH are outpacing Bitcoin. I don't know how they're doing today, but again, it's just more of this trend, right? You're looking at the news, and when you step out of that and you zoom out, you understand what's happening. People are just starting to rotate more into Ethereum.
So you made a point of you take a step back and you're starting to understand what's happening. I kind of don't really understand what's happening. Look, we've talked about Bitcoin treasury companies, we've talked about ETH treasury companies, and the ETH, the largest ETH treasury company is SBET, right? Is SharpLink Gaming, that is led by Ethereum co-founder and Consensus CEO Joe Lubin, and they actually believe just hired someone from BlackRock, I believe, to be co-CEO of SharpLink Gaming. I double check that fact. But let's take a look at what's happening. Injective is tokenizing a stock of a public company that is buying a crypto token put on its balance sheet, right? So, it is this meta. I kind of sell. It's kind of like a turducken-ish kind of structure of like token, public stock, token. So anyway, this marks the first tokenized digital asset treasury company. And it's really it's like the merging of two very hot trends right now is in general RWA tokenization, which is usually kind of boring, right? It's usually like, okay, let's tokenize US treasuries. Stable coins are a form of RWA tokenization, but combining this with the corporate crypto treasury. So you've just got this mishmash of things. So where does it end? Obviously, tokenization of real world assets is for the most part great. Just minimizes a lot of friction in terms of and increases access to these stocks that may not be available throughout the world. But then you got this interesting dynamic with the stock being tokenized, is that company's mandate is to buy a crypto token. Kind of related to that, Canary Capital last week, they filed the first Injective ETF that tracks Injective's native token. So now you got another vehicle that is tracking the protocol that is tokenizing the public company that is buying a crypto token. Access to all assets for everyone, everywhere, at whatever level they want to access it in. In general, that's a good thing, but it's just interesting times where you've got so many levels of tokenization and purchasing and tracking and access. So
yeah, I'm curious to know how some of these companies are doing, like as they're putting crypto on their balance sheet. And as an investor, you have to be like super careful. Don't just assume just because this token is going up in crypto that automatically it means that it'll be going up in whatever stock that you're buying. Not everyone is set up like MicroStrategy, and I imagine there's going to be a lot of companies that are dead underwater, and they're gonna look at all of this like crypto mania that's happening, and they're gonna ride that wave like a marketing scheme. Most likely that's not going to end well, so definitely have to be careful on that front.
many of these companies are either completely unknown, completely unrelated, to crypto. There's no synergy there in terms of, a lot of these are, this was a gaming company. SBET was a gaming company, like a casino software or something like that. A lot of these are like healthcare companies
Yep.
that have
Buying
nothing to do,
healthcare.
right? There's nothing to do with
Like
crypto.
healthcare buying hype token. Like,
Yeah,
help me
exactly. Yeah.
understand.
Yeah. So, it doesn't make much sense, at least in terms of strategy. I don't know exactly what the number is out, but they were at one point, their market cap was 2x the value of the NAV of the Bitcoin that they own. And, a lot of that is faith in their ability to raise more money to buy more Bitcoin. I think, again, there's so much financial engineering going on, and, I'm not an expert in that stuff, but like the more complex these fundraising instruments become, I think that's where you get into really, really risky waters. But, the public markets seem to value that, at that premium. What happens when the price of the asset goes down and then debt has to be repaid? But then if the price of the asset goes down, are there enough corporate treasury companies to buy to prop that up? I would love to see some kind of scenario analysis, and I'm sure there's one out there, but I haven't quite haven't dug into one where it just like shows on different. Obviously, things are great when price goes up, as it has been, but when price drops, what happens? What do they get? When debt's gotta be repaid, and what are the scenarios? What's the catastrophe that could potentially happen? It's tough to believe that this is long-term sustainable.
Okay, so the tokenization of assets, we talked about on this show that the real use case, or like the one that people get most excited about, is the one where you tokenize private equity, right? So it gives you access to these companies that are not publicly traded. See all that, but doesn't like Fundrise already technically do that without tokenizing real world assets? Help me understand that part. I don't know if you're familiar with Fundrise, Mike, but I was talking to a friend of mine this weekend and he showed me Fundrise, and you have access to all of these really interesting companies that are not publicly traded that you can invest in, and it's not crypto.
I've heard of Fundrise, and but I don't know the specifics of how that works. I'm a true believer that crypto will become the best way to make liquid assets more liquid. And Fundrise, I don't know how that mechanism works. I don't know if there's actual secondary shares being moved there, but I think that there's no doubt there's a lot of problems that and products that still need to be built in crypto to be able to make this tokenization seamless, especially with securities and stock ownership, and like we saw with Robinhood, right? Like Robinhood said you can have tokenized OpenAI stocks, but it's not really a tokenized stock. It is just a derivative, some synthetic. So there's obviously a lot of kind of things that need to be worked out with the assets and the companies being tokenized. But if you tokenize something with crypto, there's likely going to be more liquidity, less friction. Still problems to be solved in terms of user interface and access, but I believe that. So however Fundrise works, I'm not so sure, but in the end, I just think the way crypto is being built, they're going to have the most liquid markets for these.
Let's revisit that. Maybe we can come back next episode and give our listeners an update about the differences in Fundrise and tokenization of some of these private equities.
Yeah, hey, we could bring on someone who maybe who could works for a tokenization company, and I'm sure they know the competitive environment very well, and I'm sure they'll be able to talk to that better.
Yeah, absolutely. Anything else to add on this, Mike?
We did, like, I was going through the news to put together the agendas, and there was like, all right, this company bought more Bitcoin, this company bought more BNB, this company. So the news, there's like tons of news out there of just all of these companies acquiring all of these assets. So we certainly have not been totally comprehensive on everything that's happening, but I think these are the most interesting debates and topics of over the last week.
You see a trend for sure. And I will say it does open up more doors and more solutions for us to utilize crypto. Now you can use crypto as a payment. You're seeing more wallets integrate MasterCard, Visa. You now have the ability to buy a house with crypto. People complain about not being able to buy coffee, but you can buy a house now. According to this article, luxury brokerage Christie's allows buyers to purchase real estate with crypto. I mean, this is huge. And I don't think you can really get that without the institutional adoption that we're all complaining about. So we can't necessarily be all on board on one side and then complain on the other side. You got to take both of it and just accept it.
Of course. Yes, but we still can complain, Mikhail. All right. We can always complain. But yes, so Christie's, massive international real estate company, has launched a division specifically to facilitate real estate transactions conducted in crypto. So they're building out a team. This group includes legal, financial, and crypto experts to handle these peer-to-peer transactions without the reliance on banks. And so like the goal here is to enable these high-end buyers and sellers to use crypto seamlessly. It's kind of maintain that at least pseudonymity and privacy. And it's great. Like you said, the people who hate on and don't understand crypto, the first rebuttal they'll say is, well, I can't buy coffee with crypto. First of all, you can, especially with stable coins and the rise in popularity there. But look, now you can buy a house. Right? Christie's has already built a portfolio of over $1 billion in real estate. They recently executed a $65 million transaction on a Beverly Hills home where crypto was used exclusively to pay for it. So you're talking about the increased real world use of crypto. And to be honest, when I explain to a lot of people about crypto the people who are new to the industry, who want to learn more, I always say that, like, don't think of crypto as a real world medium of exchange, like trying to buy coffee with it, because that's not its primary use. I always explain that it's, for a lot of these protocols, the primary use of the cryptocurrency associated is to be a medium of exchange within its own ecosystem, and not necessarily in the real world to buy coffee or to do commerce. But we're seeing it happen more and more. And yes, it is partly in due to a lot of this institutional adoption, where it helps build trust for everyone to use it in the.
Why not buy coffee? I feel like that's more private than buying a house. If you buy a house with crypto, you're still going to need insurance. You still have some form of documentation that shows proof that you are the owner. It's very difficult because there's a lot of moving parts here, right? Purchasing the house is just one aspect. So if you remain anonymous when you buy the house, but you still need the home insurance, right? So you need all of these. Yeah, you need all of these things to remain private. So somebody buying a house right now with crypto, in my humble opinion, doesn't mean that they're trying to remain private, because no matter what, that information is going to get out there. It's just more of, hey, I made a ton of money in crypto and I want to use it to buy a house. To me, it's more of an incentive to buy coffee with crypto, because if, say, the Trump administration passes this law where anything below $600 is, you don't have to pay taxes on it, I think there's more of an incentive for people to buy coffee with their crypto than to buy a house with their crypto. And you can remain anonymous a lot more, because you don't need to worry about any of these other things that you have to worry about when you're buying a house. So to me, I feel like there's more of a use case for coffee than there is for buying a house.
So I wouldn't even, sure. I agree with that. I mean, look, crypto is going to be our money eventually, and it's going to be used everywhere. I mean, I would say, just kind of a change of subject a little bit, but like, just get a loan. Like we talked about JP Morgan doing crypto loans, right? Like, instead of selling your crypto, leverage it to get a loan to buy the house, right? So you don't have to sell your crypto. I think that's a better solution. But I see what you're saying. I get there's coffee is this one kind of one-off interaction, one-off purchase. that doesn't have this whole ecosystem of other purchases that can get linked back to that that crypto payment. Yeah, I totally get that. But I just think at some point in the world, like all that's not going to matter because we're going to be using crypto.
And the mortgage part is interesting, like having JP Morgan come into the space and offer that type of solution. I think that reputation, no matter what we think about banks, that reputation is there, and you're more likely to use somebody like JP Morgan in order to perform that. Although there are a lot of people that would put their faith in like Aave, Compound, and there's obviously a lot of great solutions there. But I also don't know. There's the price volatility aspect of it, right? And we love that volatility from an investment perspective. I mean, do we feel the same way about our mortgage? Like one day you owe 45,000, next day you owe 450,000 on your mortgage. Next day, I don't know, 1 million. So it's going to fluctuate, right? I'm sure there's some nuances there that I'm not taking into consideration, but how are people going to feel about the amount that they owe on their mortgage if they use their Bitcoin as collateral? I'm sure it's
you would have to, the loan amount wouldn't necessarily change. You just have to more closely monitor your collateralization ratio. At least if you were using something like Aave, like something more decentralized. I don't know how like the bank, like the JP Morgan crypto loans will work and how they would deal with the volatility, because if you look at how you get a normal mortgage now, it's more based on income and yes, your assets that usually are traditional TradFi assets that don't have the volatility. So that collateralization ratio is more of an internal metric for them, as opposed to something that needs to be monitored all the time if you're using some decentralized lending protocol like Aave. But yeah, it's just a different beast.
Nonetheless, exciting. I know we talk about institutions getting in. Yeah, it's a good thing to have. Next, Mike, you bring to us 3 different projects that secure funding. You come out with a newsletter once a month. Highly recommend everybody to check it out, deepventures.io. You put out a great newsletter. So today we're going to cover Poseidon, Gaia, and Quack AI. So let's start with Poseidon. I believe they're building on Story Protocol. Is that correct?
Yeah, it is. It is all about AI this week. Earlier this year, crypto and AI was super hot. There was a run up of all these, the valuations of these agent protocols was pretty insane. The bottom kind of fell out, but and then the narrative of treasury companies and stable coins and RWAs kind of took over. But look, this is the best time to build now in crypto and AI, and we're looking at great, awesome fundraisers from great teams. So Poseidon is, yes, they are a decentralized AI data layer built on Story Protocol, which is, very focused on intellectual property and provenance. They raised 15 million in the seed round led by A16Z. And yeah, so Poseidon aims to provide high quality, what's called IP cleared training data. I'm not 100% sure what that means, but having this layer of approved data for AI systems and using Story Protocol on the blockchain for this transparent licensing and fair compensation to data contributors. Their focus is primarily on robotics applications. So I think this brings up another very interesting intersection between crypto, AI, and robotics. Look, AI is all about the data, and the way that robots are learning is to take in, ingest all this data, and then use it to move in the physical world. And Poseidon seems to be focusing on this and making sure that they're using legally cleared data for robotics use cases, which I think is going to be a massive trend. Maybe not now. I think we're very early in there, but in the years to come in the crypto and AI space.
On the topic of Story Protocol, I mean, have you been keeping up with their launch? Like, would you say it's been deemed successful? What are your thoughts?
I think there's some ups and downs. I haven't been paying too much attention, and I think there's a lot of chatter on kind of like in this world of like abundance and open source and data availability, like how important intellectual property is, I still believe that it is very important, and it can kind of manifest itself in on a spectrum of ways. But I think there's a lot of chatter about how it's done, and I don't know much about how the tokens been doing, but there's obviously they've been backed with a lot of money, and they've got a good runway to build out their vision.
When you have a team like this that launches a token, usually you, from previous experience, you see these tokens get dumped when they launch. I mean, they seem to be making a recovery. In terms of use case, remains to be seen what they continue to do. At least from a token perspective, it doesn't look like they're dumping on retail right now. I don't know what the unlocks look like. But that's a different story. Yeah. With that said, Mike, let's move on to Gaia.
Yeah, Gaia is a decentralized AI agent network. They raised 10 million in the Series A, led by Byte Trade Lab, SIG, Mantle Network, and Marana Ventures, with participation from many others. And overall, Gaia is a decentralized AI ecosystem that users can contribute data, resources, compute, govern a network. But what's interesting is that they're going to launch the Gaia AI phone. So it's going to be a privacy-focused smartphone designed to run AI models locally, enhance user control over data. And again, this is kind of this. I won't say it's a huge shift, but a shift of AI going towards hardware, and the combination of software and hardware. We talk about the Solana phone, the Ethereum phone, and you've got the Gaia phone where you can run localized models to ensure privacy. And this is the direction that Gaia is going with this fundraise.
Interesting. Yeah, I am starting to see that trend as well in terms of just getting closer to the user from just palm of their hands, and obviously with everything that base app is doing as well.
Yeah, palm of their hands, and with the hardware, you've got way more control when you can keep things locally. It's usually a tougher, we're so used to using cloud-based applications, accessing everything over the internet. But if your true control lies in running a local hardware, when it comes to your data.
Last but not least, Mike, we've got Quack AI.
Yeah, man, this is so cool. Like, we'll see if it works, because running DAOs is really hard. But Quack AI is a AI-powered governance protocol. They raised 3.6 million from Animoca, Kinetic Capital, Skyline Ventures, and others. And it was funny, like when crypto and AI first came out, one of the examples that I used, what was kind of this pie in the sky example, was someday we're going to have AI agents in DAOs and in all these sub DAOs, essentially automatically assigning work that needs to be done, and to community members, right, in a decentralized manner.
Whoa. Time out. You're telling me that we reached a point in our life where AI is assigning work to humans and not the other way around?
That's right. And I think that's just, so like that, but literally this was like, 4 or 5 years ago, just brainstorming ideas of how AI and crypto can intersect. And, DAO management was one of those ideas. Assign work, assess the work that's been done, automatically pay the contributors based on the quality of the work. It looks like this is the direction that Quack AI is going. They're using autonomous AI agents to automate decision making, the real-time execution, risk analysis for DAO. So it seems like they're doing specifically for DAO proposals. So maybe it's not at the scale of what I just mentioned, but like this is one part where, okay, maybe Quack can read DAO proposals, break down the pros and cons of them, and kind of the feasibility of these proposals being implemented. So still taking a piece of that overall decision making process and automating it, but definitely a step in the right direction for that kind of pie in the sky vision that some of us had a few years ago.
DAOs are so tricky. And every time I talk to people about, network spotlight and just this idea of turning it into a DAO, a lot of the quote unquote experts in the industry always say, man, no. Like, you don't want to go down that path because it's so tricky. You can get into so much of a mess. So yeah, I do feel like that's an Achilles for the industry. And I feel like something needs to be in place to solve the problems that are arising there.
So I helped launch the DC DAO, the Washington DC crypto communities DAO. We invested in Gnosid Guild that is built DAO automation tools. And I think a lot of people are just writing off, like saying, oh, like DAOs are too hard, DAOs are done. And I think that's short-sighted. I think that there's certainly, look, we're in, the second inning of this type of experimentation on how to run radically different structures of companies. And there's absolutely going to be growing pains on that. Well, we're going to get there. I think with AI is going to help. And I think just like, but they're thinking about the vision of a decentralized organization, how crypto has connected people from across the globe around shared interests and communities. I think that's kind of a mission worth pursuing, no doubt.
On the same note of just connecting people and bringing people together around one common goal, that's something that I'm trying to do as well with Network Spotlight. So for those that are not part of the community, I highly recommend you join. We connect virtually, we connect in person. And I actually am hosting this event, have it up on Luma. So I'm going to include the link in the description so you can sign up to it. We're going to talk to Dairyverse, which is an up and coming exchange on Solana, and also Decentral. They're doing uncollateralized loans and they're focused in the LATAM region. So if you're passionate about learning about different type of projects in different parts of the world, we all have our different perspectives on how we view crypto. This is a great event to connect, to learn, to grow together. So looking forward to helping you all connect for that. And it's all about community. And that's why this last project that Mike brought to our attention is really interesting. Definitely check out Mike's newsletter, deepventures.io. He puts out a great content there. Follow Mike on X and like this video, subscribe to the channel, and we'll catch you guys in the next one. If you're a founder or operator in Web3 and want to connect with others like you, head on over to networkspotlight.io and apply to become a member. See you on the inside.